Most portfolios look diversified on paper, but they don't always behave that way when it counts. You might own a mix of mutual funds, annuities, and ETFs, but if every one of those assets reacts the same way when the market stumbles or inflation spikes, you aren't as protected as you think. True diversification isn't just about how many things you own, it's about how those different assets perform when exposed to real-world risk.
Merit Advisors, helping improve lives by making ideal choices.
Think of your retirement plan like the story of the three little pigs. In the end, it was thoughtful preparation and the right building materials that saved the day. To build a fiscal house that stands up to an economic storm, we look at three distinct layers. First, you start with a stable foundation. These are the assets you expect to stay solid even when the economy feels shaky, things like CDs, treasury bonds, or fixed annuities. These basic building blocks are meant to provide the steady, reliable income you need when you're no longer earning a paycheck. Next, you build sturdy walls. The walls of your fiscal house should be durable enough to withstand most storms while allowing for the growth needed to keep pace with inflation. This layer might include bonds, real estate, or dividend stocks. These assets carry a bit more risk, but they add the necessary diversity to keep the structure standing. Finally, you top it off with a roof. This is where you hold your growth-oriented investments like stocks and ETFs. This layer is exposed to the most risk, but if the roof fails and the rest of your house is solid, your entire structure remains secure. Many investors focus on horizontal diversification, simply buying different assets at the same risk level, but a resilient plan requires vertical diversification, holding assets across different account types and risk levels that don't all move in sync with the general market. This is critical because of sequence of returns risk. A market drop in the first few years of your retirement can deplete a portfolio much faster than you'd expect. A well-built plan ensures that a bad move in the market doesn't derail your entire future. If you feel anxious when the market wobbles, it's a sign your plan may need a renovation. You don't have to settle for a cookie-cutter portfolio. All of your components, from the foundation to the walls and roof, must work together to create a plan that stands up to whatever may come. Connect with an advisor at Merit Advisors LLC today. Let's take a closer look at your fiscal house and turn a wobbly plan into one that takes you confidently through a long and fulfilling retirement.
If you have a question about what we discussed today, or you'd like to speak personally about your unique situation, please give us a call or shoot us an email. We'd love to hear from you.